We specialise in protecting, preserving and growing your wealth. Blacktower Financial Management, the team you want by your side. Visit blacktowerfm.com.
We're at the 7th of February, 10% into the year, and a Tuesday when we welcome back Christina Brady from Blacktower Financial Management. On the line, you know you've got to leave the house at some point in spite of what the weather's doing. I'm sure you've got office appointments and the like. Good morning, how are you doing?
I'm fine.
Here's the thing, I'm just playing Jennifer Lopez there. Do you know what the Meldrew point is? Have you heard this?
No, I haven't got a clue.
Okay, well, it's when you reach the age that Richard Wilson was when he started playing Victor Meldrew in One Foot in the Grave, and Jennifer Lopez reached that point a couple of weeks ago.
What age is that?
19,537 days, which is basically 53 and a half. He was only 53 when he started One Foot in the Grave as grumpy old man Victor Meldrew.
I thought it was about 80.
Well, there's something to think about. It'd spoil your day, probably. But,
it has, actually.
Thank you.
Now I understand why we're so grumpy.
Yeah, I haven't quite reached Meldrew point, I'm happy to say, but it won't be far off, I'm sure. Anyway, thank you. Welcome back. As I often say, we're very lucky to have you for this hour every other Tuesday from Blacktower Financial Management. And, where to start? You've given me the list of things already. I suppose, should we start with some, it's sort of positive news. We had the FTSE closing an all-time high last Friday. Am I right in saying that?
You are. You are, the all-time high. But once it hit that, we all knew it was going to fall back. And it's not bad, though. It's still at 7,881 this morning. It's up 0.5%.
What's driving that? What was mainly driving that?
The thing is, it shouldn't have gone that high. If you look at all of the underlying economic data, there's no reason for the FTSE to have gone that high. OK, the Bank of England raised interest rates 0.5% last week to 4%. The ECB raised their rates again 0.5 to 3%. And the US raised theirs by 0.25 to 4.75%. And they've said that there will be more interest rate rises again throughout 2023. But the FTSE, I think, I'm not sure why, but it has come back down. And I expect it to come down more. And I think what people have to remember is the markets can be wrong. Most funds have finished up in January 2023, but there is need for caution. And the reason for that is everyone expects a slowdown in world economies and recession. And historically, whenever the only reason we've ever been able to get inflation under control is if we have a recession. So it's never happened without a recession.
No.
So if you look back across all the when we've had high inflation, there's always had to be a recession. But what's happened is the stock markets knows this. So hopefully, if there is a recession, it won't be too large and too big, and it won't last for too long. And the markets will have factored it in. I think what people are worried about is a shock which sends the markets down again. I think there's a lot of people out there that are thinking we're still going to have a large correction in the markets. Other people think that it's just going to be 2023 is going to be quite volatile, so the markets will go up and down. We're not going to see any real growth, but we're not going to see any sharp falls. I think we will see some bigger dips than we see markets going up. I think there will be some adjustments, but I think what most of the investors realise now is that if you are invested, you just have to sit tight and remain invested. Things do come back up. If you look last year, some investments were looking quite bad, and I think 95% of funds were down, whereas in January, 95% of funds had actually gone up in January. So it's quite volatile. But if you look at there's been quite a few surveys done within different age groups in the market. So they did 18 to 34, I think 35 to 44, 45 to 54, and plus 55. And most people had a positive outlook for 2023, 2024. I think the one that was most sceptical was the plus 55.
Yeah.
Yeah,
I've seen it before,
quite a few of them were indifferent, but most of them realised that you know it's best to buy in a dip, and if you are already invested, to sit tight. So when we've seen the markets go down, we haven't seen the big exodus from like retail, what we call normal clients, that would have happened in 2007, 2008, because people were used to it. That was such a large shock. And again in March 2020, when we had that big dip, I think it was 38% in literally a day, and people held tight, and they do realise that if you sit tight, historically, over time, your investments will grow. And I think what people understand is with investing, it's not time in the market, it's the time you have in the market. So the longer you keep your investments invested, the more money you'll make in the outcome. If you want to just try and make quick money, then you need to go into daily trading. So you do foreign exchange, you do stocks and shares, but you really need to know what you're doing.
Yeah, now we're saying that's a high point, and it would be for people invested and sort of index linked, as it were. But it doesn't tell the whole story, does it? For the regular guy on the street, the stock market's being up. There's other stuff going on.
Because most people have a diversified portfolio. And if you look across Europe, you've got the CAC and DAC. Oh, that sounds also CAC and DAX, yeah. which are down. You've got the Nikkei, which is down. You've got the American markets, which closed down last night. You've even got the FTSE 250, which is flat. It's down slightly. And you've got the AIM, which is the alternative investment market. That's down as well. So it's when people come to me and they say, if they're invested, they've got a euro investment, they say, but the FTSE is at all-time high. Usually if you have a euro investment, if you're in a portfolio, it's made up of mostly European equities and bonds, etc. And if you've got a global portfolio, obviously everything impacts it, not just the FTSE. So if you put your money in, say, a FTSE tracker, last week you would have been going, made loads of money, but then it's going back down again. So everything, can go up and down. Nothing is set. So people just have to be realistic on their goals and what they expect to achieve from their investments. Yeah,
the surveys you were talking about a moment ago, that I've always thought, perhaps in my naivety and layman's view, that consumer confidence sometimes can go a long way, or are they up against it at the moment? Can it only go so far with everything that's going on at the minute?
I think, you can only go so far. Economic, social, and obviously political environments impact everything. So, but I think most people realise that, if you'd left your money in the bank since 2007, 2008, you've made absolutely nothing. Even with interest rates going up, most people aren't passing on those interest rate rises.
In Britain today, the heads of the biggest banks, HSBC and all of those, are appearing in front of a select committee at the House of Parliament there, just talking about one of the big sticky questions they say will be, are you passing on this rise in interest rates to savers?
Yeah, we've known that the banks haven't been passing on interest rate rises since they started. And they'll have these committees, but nothing ever changes. And I don't know how they get them to change. I think they need to pass laws that state if there are rate rises, they pass a certain percentage of that onto investors and savers straight away.
So they're not obliged to do that as soon as the rate goes up, the base rate goes up? Oh, okay.
No, there should be a law that states, if the Bank of England puts up their rates by 0.5%, then banks have to put their savings rates up by at least, 0.4% or something. So it gives them a 0.1% margin. But the banks know, they're all, I'm sorry to say this, but financial institutions, companies are very greedy. And if they can make money, they will. So if you think that they're paying savers about 2%, and yet mortgage rates are, 6, 7, 8% at the moment, there's a huge margin of profit there for the banks.
Yeah, I wonder if it's like the sort of market forces thing. So if one of them maybe puts up their rates a little bit, the others may follow. Like the supermarkets have the fuel battles.
Oh, yeah, they do. They all follow suit.
Yeah.
If one gets away with it, they'll all follow suit. It is ridiculous. And also, I know this sounds awful, but it's sort of like a cartel. All the heads of the banks know each other. They go to lunch together. They play golf together. They are socially out together. They know what's happening. They go out with the people who are on the rate committee of the Bank of England. They have an understanding between them that I think no one's going to break ranks. They don't like competition. It is a cartel by any other words. They've got the market sewn up. And it is really worrying because what we've got now is, banks are refusing loans. And I think 1 in 7 people now are being turned down on loan applications, which has mean the return of loan sharks for vulnerable people, for those that need money and can't get it from the banks. So that is something very, very worrying. And it's something, that we don't want to happen, because this is when people will get into a never-ending cycle of debt. They can never get out of it. And these loan sharks, can be quite nasty.
Yeah, well, did they clamp down a little bit on those, the sort of payday lender things in the UK? They did, didn't they? But you'll still be able to get it somehow. There are ways.
You will. And I think, if 1 in 7 are being excluded in the UK, I would say it's similar to that in Europe, if not higher. And it just, it leaves the market open for these unscrupulous people. And people don't understand money. Most people don't understand interest rates. They don't understand that if you borrow £100 and the interest rate is 10%, you've got to pay back 110. But with loan sharks, the interest rate is more likely to be 50%. So if you borrow 100, you've got to pay back 150. And if you haven't got the 100 to start off with, how are you ever going to pay back the 150? And I think, this is where we need MPs and governments to step in and say, right, interest rates have risen, people can't afford their loans, or people can't get loans. We'll set up a fund where the most vulnerable can come to us, the government, and get a loan, and at a reasonable rate, rather than open the market for these loan sharks to come in and take advantage of people.
Yeah, it reminds me of, I know a fair bit about the sort of mob in the Italian American mafia, and it's called the VIG, is the interest you pay on it, and you never get around to paying it off. And you never get around to paying the capital off, the initial loan bit, because the interest rate is so high. That's all you can manage to sort of pay off each week.
It's like with credit cards who get their debts up. They raise their limits, so people have 20, 30, whatever thousand on a credit card, and the interest rate, they're just trying to pay off the interest each month. They're not even managing to do that, and it's just growing and growing and growing. Okay, credit card companies aren't going to come knocking on your door and shoot at your kneecaps, but loan sharks might.
Yeah, and it is a thing that you think, I can manage to pay that. If I pay that off before the end of the month, then it'll be cleared. But it just goes on and on. And you can get I don't know if they're still as easily available, but the sort of 0% balance transfer cards might be a way of doing it, consolidated onto one. If you have got some credit card debt, that seems to bring it down a little bit if you're not paying interest each month. A bit of a fee.
But you've got to remember that if you're not a UK resident, most of them won't let you open up a credit card now. And credit cards in Europe work different to the UK. So you're talking about being able to get UK credit cards.
Yes, that's true.
So,
yeah.
We've got to remember we don't live in the UK anymore, and it is more difficult for people. And once you get into debt, it's very, very difficult to get out of it. It just spirals out of control because, as you say, you think you might pay it off in that month, but then you need to eat for the next month. You need to pay your bills for the next month. And with inflation going up so quickly, prices going up so quickly, you haven't got the surplus cash. People haven't to be able to do this. So I think governments do need to step in, and they do need to offer like a loan relief fund for people that need this money desperately.
Yeah, it doesn't seem that long ago they were throwing loans at you, loan offers. You could have this like today if you filled in the forms, but that's
exactly.
It's all got a bit quiet
most
there.
People are very, very much in debt. Most people have, double mortgage, triple mortgaged their house. They've got, and now with house prices in the UK falling, they've fallen for 4 months flat. You could end up with negative equity. Wow. So you haven't got the equity to pay off your loans, which could lead to a housing crisis. Although house prices in the UK and I think in certain areas in Europe are overinflated, so there does need to be a paring back. But as you said, banks allowed them to lend. They lent to them so much. Their debt level is so high, and these people are on the verge of bankruptcy.
There's a mate of mine who's the most irresponsible, wild sort of living. He got a mortgage, and I couldn't believe it back in the day. Somehow, they probably falsified a few things, but they gave it to him. And yes, I think he may be struggling a little bit to pay it back these days. Let's talk some more in just a few minutes' time here. Christina's here from Blacktower Financial Management. Now, where did we get to? We're still talking about banks. There's something else you wanted to mention.
Yeah, the WEF, we had Davros the other day. They made an announcement that ideally they want to get rid of all high street banks by 2027.
Oh. Is this like they're tying in with the digital currency story, Bitcoin?
It is, yes. The thing is, I think, if you look around the UK, there's been so many branch closures. And I think it's absolutely disgusting. If elderly people need to speak to someone about their money, you have to try and go on the phone. Have you tried phoning your bank? How long are you on hold for? How many different people are you passed to? It's really nice to have face-to-face. And I think if a bank is brave enough to keep its branches going, I think they would get more clients and customers than anyone else. So the WEF says it wants to get rid of all banks because ideally all the central banks, all the governments want us all to switch to digital currency. The reason for that is then they know exactly what everyone has. They know exactly what everyone's spending. There's no way to avoid any tax. There is no way to hide any money. There's no way to work on the black. So I think a digital currency may be a good idea for some people. For most people, I think we'd all like to keep cash. And if you look at the remit for most central banks, it is to eliminate cash altogether.
Worth mentioning, it's not just in Britain where the high street banks are closing down. They're in Spain as well. A lot of branches shut, yes. And across Europe, I guess. And it's always an issue, especially in Spain, with the sort of remote areas. Remember the old fella that won his campaign that I'm old, but I'm not stupid. And he didn't, he's didn't want to use the machine to do everything. Still wanted a little branch near him. I
think that's correct. I've got lots of elderly clients who don't have, a tablet. They don't want to use internet banking. And I know Sabadell insists that most people do stuff over the internet. And I had a lady phone me the other day. She said, I'm trying to get an appointment with Sabadell Bank. She goes, I've been into my branch and they've told me I have to do it all online. She goes, but I don't use online. She goes, so how am I meant to do it? She goes, I went in and explained to them. And they basically told her to go away. And I think this is absolutely disgusting. I think it's trying to dictate to people on how they should use their lives. And I think if there is a branch and you walk in and you want an appointment, they should be able to make you an appointment, not send you away and ask you to do it online. Even, some of the youngsters nowadays are never going to be that savvy to understand how to do banking and everything on their phone or on their tablet. So I think that's not, it's not fair.
No, well, it needs a while yet before everyone's sort of up to speed and they get to that age group where they're all doing it. Because it's the way it's going. We can see that. But
but the older you get, the harder it is. And I don't care even if you have been computer savvy. When you get older, you lose those skills no matter what you say. And I think there has to be some give and take. And I think they have to give us the freedom of choice. So that's on banks. So, if you do need an appointment with your bank here in Spain, if you want to go into your branch, especially if it's Sabadell, I think they'll tell you to go and book an appointment online if they can. So if you have got online access, do it that way. If you haven't, I'd say go in and make your voice heard and say that you want an appointment.
I saw a meme earlier online. I think it was something about 2022 that Taylor Swift was the most streamed and most listened to human on the planet, apart from the hold music at NatWest. That's coming down the phone line.
Which is most probably true.
Yeah, it's probably about right, yeah. Now, here's another thing as well. I always enjoy it when you mention premium bonds because it seems like a throwback to the past, but they're still a thing, right?
They are, yes. Lots of people hold premium bonds. And I had a gentleman the other day who sadly his wife has passed away and she held some premium bonds. And he has the will and everything, which said everything's left to him. And he's having a real nightmare getting his money out of premium bonds. They're asking for a UK grant of probate. Obviously, they live in Spain. They had a Spanish will. They're having to get that done. And they're charging him £273 to get the money out. And this client just said, if you have premium bonds, please can you talk about it on the radio and say to people, cash them in. Yeah. He said it's been a real nightmare. And especially when you've lost someone, you need as least hassle as possible. And this has taken, I think it's over 6 months to get to this stage. And they're still nowhere near getting this money out of premium bonds. It's becoming a real nightmare. Yeah. And he's had to ask his daughter and his family to help because the paperwork, he said one form he had to fill in was about 25 pages long and most of the questions weren't relevant. And he phoned them up. He said, why have I got this questionnaire? None of the questions are relevant. And they said, we know that, but we have to send it to you anyway.
That's a familiar response, that, isn't it? Yeah, because that's how we've always done it.
Yes, exactly. So just be very, very wary. The last thing you want is when something like that has happened and maybe you need to get your hands on the money or maybe you just, you be very careful, and just make sure, if you have got premium bonds, I would maybe, if you are elderly or you've got an illness, phone them up and ask them what is the process if you die, what needs to be done, and if it does sound too complicated, maybe cash them in. Okay, maybe put them somewhere where it's easier to get access to the money.
When does it get drawn? Do they still do the prizes through those? Yeah?
I don't know, because they keep on changing the amount of the prizes, up and down. Actually, NS&I have brought out some new saving bonds, which actually pay better than their premium bonds. And that's worthwhile. Some people looking into that if they want to. I think they brought out their new savings bonds, which are actually got a much better rate of return than premium bonds.
Yeah, it doesn't get as much heat as the lottery numbers. It's not as easy to find online.
No.
It's not thrown at you in the main news bulletin of the day. But we haven't mentioned the exchange rate, actually, which it was down a little bit. I know the US dollar to the pound only at 120 at the moment, where it had been 123. But euro to sterling just over 112 is all.
I know, that's not good, is it? But it is good for you because you send sterling back. But if you want it the other way, it's not good. Just a couple of things to mention. Just on UK inheritance tax, they froze the allowance. So the basic threshold is 325,000. What people forget is if you live in Spain, if you are British, you're still subject to UK inheritance tax on death. Okay, and what's happened is because they've frozen the thresholds, it means that more people are paying inheritance tax. It's no longer just an issue for the wealthy. And between April and December 22, they got 5.3 billion in inheritance tax, and the basic threshold is 325,000 per person, up to 500,000 if a house is included. If you're married and one of you died and you didn't use that allowance because spouse is free in the UK, then obviously you get 650 and $1 million. But then anything after that is taxed at 40%. Which is a huge amount. So there are ways to mitigate inheritance tax. So people need to look at that. And also you have to remember in Spain, it's very, very different. We don't have spouse to spouse in Valencia being free. You only get 100,000 each. And remember in Spain, if you both die and you leave it to your beneficiaries, they are taxed on all your assets under Spanish inheritance tax that are based in Spain. So that is something to bear in mind. Just a quick note on there. So if anyone needs to talk to anyone about mitigating inheritance tax, obviously Blacktower are here to help. And talking about Blacktower, I had a lady I was speaking to the other day, and she said, 2 years ago, she goes, I wanted you to do an investment with you. She goes, but I didn't realise that you did home visits. She said, so I went and did a fondo with my bank. She was phoning me up because she has a fondo with her bank, and it was meant to be 90% capital guaranteed, and it's gone down by 15%, and she couldn't understand why. And it's because the banks hadn't told her all the facts about what she'd taken out. And what Blacktower, I think, are quite unusual in that we will visit clients at home. So if you are elderly or you're ill, if you phone the office to make an appointment, we will come and visit you. I know some financial advisors insist you go to their office, but no, we are human. And we do understand that some people can't come to the office, and we will come and visit you. So if you are in that situation, please get in touch, because we are more than happy to help you.
I say this every time home visits get mentioned, I know, but I'm in danger of repeating myself. But when you visit someone at home, it's probably better because they've got all their stuff there. They might forget a document if they come and see you in the office, whereas it might be just upstairs if you go to their house.
Yeah, I know this sounds awful, but especially if you're elderly, sometimes that can happen. It can happen to the best of us. Most people are very, very good, and they do bring it to the office. I have one lady who is in her 90s, and she never forgets anything. But some people just can't. They don't even... Oh, sorry, that was just the phone making a noise. Right. They don't drive, or they're not well enough to drive, or they don't feel comfortable, driving to the office. They may live a little way away. And you've got to remember, at Blacktower, we have the office in Javier, but we cover from Valencia down to Murcia, and we have people living in most of those areas. So we have people in La Zenia, we have people in Torrevieja, near Benidorm, Javier, Moreira, Valencia. So we can cover a lot of area, and we go inland as well. Yeah. So if you are in that situation, please get in touch. We don't just cover like Javier and the surrounding areas. As I said, we cover the whole of the Costa Blanca. So that's Alicante, Valencia, Castellon. we are here for you. And I think that's very important for people to remember, because otherwise you may go to your bank, you may be talked into having one of their investments, which you don't fully understand, and you could end up losing more than you expect to lose.
Yeah, and for you, this is your core business. It's not necessarily the bank's, main
It is.
focus.
The banks, most of the people, when you go to see the people in the banks, they have sales targets, they have products they're told to sell. If you ask them about it, they don't really understand what the fundamentals of those products are, what the underlying investments are, or what the terms and conditions are. Whereas obviously at Blacktower, we've been doing it for, 38 years now. We understand products inside out, and we can talk to you and we can understand what is best for you, rather than just sell you one product off the shelf. The best thing is to email info@blacktowerfm, that stands for financialmanagement.com, or you can go onto our website, which is blacktowerfm.com, go to a contact page, just fill in your details and put for the attention of Christina or BayRadio, and then they know who it's got to come through to. Or you can go onto the BayRadio website. If you go on advertisers, you click on Blacktower, it will take you through to our website, again fill in a contact form, or you can always call the office, which is 965058212. If you go on the website, if you go under locations, under Costa Blanca, there are all the contact details there as well. And remember, we don't just cover Spain, we cover France, Italy, Germany, US. We have branches in most countries across Europe, and as I said, US, South America, and we are opening in Australia and the Middle East. So if you're listening from those areas and you need to have good financial advice, please get in touch. And if all else fails, you can always get in touch with BayRadio. Mm-hmm. So that is studio@bayradio.fm, and they pass everything on to me. Or you can WhatsApp them, and the only person who ever knows their WhatsApp number is Moody, so he can tell you.
Only because, so I mentioned this last time, I still have to look at it on the wall, even after all these years. It's been like 6 or 7 years we've had this number, 684 455 844. Use your WhatsApp number to come through at any time of day here. But yes, if you have any questions for Christina, we can pass them on. But in a week's time, it'll be Valentine's Day, so you won't be on then. You'll be back in 2 weeks' time, which is a shame, because nothing more romantic than talking about the FTSE 100 and the Federal Reserve in the States.
Oh, I don't think that's what hubby and I will be doing. I think we'll be having a nice romantic day, hopefully.
So we thank you for your time, as always. I'll talk to you in a fortnight's time.
Listening and exceeding expectations for over 31 years. Blacktower Financial Management, the team you want by your side. Visit blacktowerfm.com.